Hey everybody, it's Daniel Murphy down here in Myrtle Beach with BRG Real Estate. Just wanted to quickly go over the first quarter numbers, but more importantly, what we're going to discuss in this particular video in the newsletter is what we're going to see moving forward, at least what we're predicting to go moving forward as based on what we're seeing today. So if you quick look at the numbers on the residential side, you saw that in the first quarter of this year compared to last year, there was a $74,000 rise in the average sale price for a residential home, from $346 up to $420,000. That's 21% jump year over year. That is a huge number. That's a massive, massive amount of appreciation in a short period of time. And if you look on the condo side, again, it went from 190 up to 241. That's about a $51,000 price increase. You're looking at 27% on the condo side. So these are insanely high numbers to see an appreciation in a short period of time. I'm not a historian, but I have to imagine they're historically high based on at least the 20 years I've been in the real estate business that we're seeing. This is certainly a very similar market with regards to that amount of appreciation in a short period of time as we saw in 2005 and 6. But there is a big difference between those two markets, and we'll discuss that here in a bit. So the reason we're seeing these huge price increases is because there is a huge disparity in the amount of people who are looking to purchase a home here in our area as opposed to those people who are looking to sell a home in this area. That is always the case when you're seeing huge swings in prices in short periods of time, is that there's just a huge disparity in the supply and demand market. And so certainly right now it is a seller's market. What we're going to see, at least what I believe we're seeing moving forward, and I'm already feeling it somewhat now, is that things are starting to shift slightly. So when we would put a property on the market last year at this time, you would see immediately offers coming in on those properties, and you would see in many cases multiple offers. I was in a multiple offer situation on a over $1 million property last year. There were 9 contracts on that property. So what we're seeing now is when properties do come on the market, some are getting written on immediately, but some are sitting. They're especially on the condo side. I feel like they're sitting a little bit longer than we saw last year. That may be. We'll discuss why that may be, but we're also seeing even when you do write offers, I'm calling to see, hey, do you have any offers in place before we get into a scenario of writing a contract? We'd like to know, are we in competition with other potential buyers? And in most of the cases, I'm getting, no, we don't have any offers at this time. So that's showing that we are starting to shift somewhat. So one of the biggest reasons is again, these huge price increases. So when you talk about somebody who was looking to make a purchase down here last year and they were looking at a $300,000 property, that's what they could afford. That same property now is somewhere at $350 minimum, maybe $375. So those people are just getting priced out of the purchasing process. The other thing that we're going to see as we move forward into this year is mortgage rates are starting to rise, and they're rising rapidly, and they're rising in big chunks. It's not small increases. In mid-February of this year, the mortgage rates were right around 4%. As of today, mid-April, you're looking at 5.25%. So that's a 1.25% in just a month period of time, and they're going to continue to rise, at least from what I'm reading, through 2023. So to give you perspective on that from a buyer's standpoint, if you were looking at a $400,000 home and you're putting down 20%, you're going to be financing $320,000. That mortgage rate obligation monthly goes from $1,527 at 4% up to $1,767 at the 5.25% where we are now. That is a $250 roughly difference in your mortgage obligation monthly. A lot of people just can't afford that gap. So those people are either going to have to start looking at properties that are smaller or that are cost less, and that may not be in their plans. So we're not seeing, at least currently, a slowdown in the buyer demand for properties, and we're not seeing a slowdown in the amount, or we're not seeing an uptick in inventory, but I think that's starting to shift, and I think that will continue to shift through the year. Now, as I said, we would talk about the buyers or the types of people who are purchasing in this market today. They are completely different than 05 and 06. The regulations for borrowing money is much stricter. The properties, even the types of properties that banks are willing to loan on is significantly different. They're much stricter guidelines. So the people that we're seeing that are purchasing in this market are people who are going to be living in these homes, or if it's on the investment side, they're not being able to buy multiple properties through financing means. So a lot of them are cash. So I don't see any chance that we're going to have any market crash in the near future, no housing collapse in the near future. What I think you're going to see is a correction. And that just is going to mean that we might see the gains drop off from these ridiculous 27%, 21% down to something that's more manageable. If you have any questions about your property here at the beach and maybe what makes sense for you, if selling now or holding makes more sense, if you're looking to buy here in our area, please give us a call. We do work the market all the way from Pawleys Island on the coastline up to Ocean Island, North Carolina, and we go as far as west as the Conway area. Again, this is Daniel Murphy. I appreciate your time.